3,812.12 lakhs. Seriously, let that sink in for a second. That is the massive, undeniable net profit figure Krishna Defense and Allied Industries Limited posted for the fiscal year ending March 31st, 2026. If you've been keeping tabs on the defense and dairy equipment sectors, well, you already know that numbers like this don't just happen by accident. They are the result of some seriously intense operational scaling.
Welcome to The Explainer. Today we're unpacking exactly how Christian Defense pulled off this absolutely incredible financial turnaround for FY 2026. We're going to look way past the headlines and dive straight into the raw data so we can understand the financial wins, where they deployed their capital, and the strategic governance maneuvers that made this year a total landmark for the company. And to do that properly, we're going straight to the source. We'll be looking directly at the official outcomes of their board of directors meeting from May 20th, 2026, alongside their audited financial results. So here's our roadmap for today. We've got 5 key areas: FY26 financial highlights, income versus expenses, assets and cash flow, dividends in the AGM, and we'll wrap it all up with leadership and governance. Let's get right into it. Starting us off, we have Section 1, FY26 financial highlights. Now, what's really fascinating here is the sheer scale of the year-over-year growth. We're not just looking at a modest little bump. Back in FY25, Krishna Defense posted a net profit of 2,202.87 lakhs. Fast forward to FY26, and boom, that number surges to 3,812.12 lakhs. That dramatic jump represents a massive, absolute financial win. And honestly, it points to a highly efficient scaling of their operations over the last 12 months. So, the obvious question you're probably asking is, what does this actually mean for the folks holding the stock? Well, it translates directly to the shareholders. Riding the high of these profits, the board recommended a final dividend of 1.25 rupees per equity share of 10 rupees each. That's a really solid 12.5% dividend for the 2025-2026 financial year, directly rewarding investors for the company's stellar performance. All right, moving on to Section 2, income versus expenses. Let's see how this all builds up. You literally can't grow your bottom line without feeding the top line, right? And this brilliantly illustrates that engine at work. Revenue from operations jumped from 18,961.38 lakhs in FY25 to a commanding 24,478.22 lakhs in FY26. This tells us for sure that the profit surge wasn't just the result of some aggressive cost-cutting or clever accounting tweaks. No, it was fueled by genuine, substantial growth in their core business operations. But of course, making things costs money. Let's simplify some of those dense expense spreadsheets and look at exactly where the company's capital is being deployed. Unsurprisingly for a manufacturing entity, the lion's share goes right to the cost of materials consumed, sitting at 8,625.43 lakhs. Coming in further down the ledger, we've got employee benefit expenses at 2,032.40 lakhs. It's a really clear picture of a company investing heavily in the raw materials they need to fulfill that surging top-line revenue. Let's pivot over to Section 3. Assets and cash flow. Okay, any seasoned investor will tell you that profit is an opinion, but cash is a fact. And this is perhaps the most staggering fact in the entire report. Net cash from operating activities came in at a massive positive 8,604.59 lakhs. To put that into perspective for you, in FY25, this exact same number was actually a negative 1,091.30 lakhs. Talk about a turnaround. Let's translate that dense metric into plain English. Essentially, this means the core business is generating real, usable cash. They aren't just tying all their capital up in inventory or sitting around waiting on receivables. Their operations are spinning off massive, real liquidity. This cash turnaround, it's the ultimate truth teller of their current financial health. Moving right along to Section 4, dividends and the AGM. To finalize all these financial rewards, including that 1.25 rupee dividend we talked about, the board is convening their 13th annual general meeting. So you might want to mark your calendars for Wednesday, July 15th, 2026 at 11 a.m. It's happening fully virtually via video conferencing, and that's exactly where shareholders are going to officially greenlight all these moves. Finally, let's look at Section 5, leadership and governance. Look, when a company's cash flow and profits surge this aggressively, rigorous oversight becomes absolutely critical.
For the FY26-27 period, the board has brought in some serious new auditing muscle. They've appointed MS Zarna Thakur and Associates as cost auditors, bringing over a decade of experience across various industries to the table. Joining them are MS Niket Shah and Associates as internal auditors, which is another firm with over 10 years of really deep experience in statutory audit and GST. But they aren't just completely changing the guard here. They're also locking in their seasoned veterans. The board approved the reappointment of Mr. J. Kumar Toshniwal as an independent director for a second 5-year term. Just look at these credentials. He's a chartered accountant, a postgraduate from the highly prestigious IIM Ahmedabad, and he holds 35 years of active experience in Indian capital markets. That is a serious anchor of financial acumen for the board.
And right alongside him, they secured Mr. Divikant Zaveri for his second 5-year term as an independent director. Also a practicing chartered accountant, Mr. Zaveri brings over 3 decades of deep, varied experience across accounts, finance, taxation, and corporate management.
It's absolutely vital to realize that these governance decisions aren't just dry, bureaucratic housekeeping. They are highly calculated, strategic efforts. By bringing in strict new auditors and retaining highly experienced financial veterans for second terms, Krishna Defense is actively solidifying a board that is fully capable of managing and protecting its surging profits and massive new liquidity. So there you have it. We've seen the 70+% profit jump, that massive swing to positive operating cash flow, and the strategic locking in of elite financial leadership. The foundation is clearly set, which leaves us with one final incredibly provocative question to consider. With overflowing coffers and a battle-tested board, what sector is Krishna Defense going to disrupt next? Thanks so much for joining me on this explainer. Keep learning, keep questioning, and I'll catch you next time.